Saturday, September 4th, 2021, Monaco 64, home of alternative economics and contrarian views. Before I start today, I'd like to say I did the Mike and Mario show yesterday afternoon. I posted it on my channel last night, so if you haven't watched it, I recommend you watch it if you have some time. We spoke about the jobs data yesterday and about many other things. Today I'd like to talk about gold, silver, and the miners. It's looking better and better, the technical picture. Yes, I've always told people that aside from holding gold as a long-term insurance policy against currency debasement, we like to look at the technical picture as well, especially for someone like me who worked over 20 years in the markets, and some of you might still be trading it. I have exposure, of course, to the miners. I don't really trade gold and silver, but it's always interesting to look at the technical picture, and I think it's getting a lot better. Yes, it has been a frustrating 12 months of consolidation in the precious metals. They did very well last year, from the low in March to the top around August, September. Yes, the other commodities have outperformed in the last 12 months, but if we look back to the bull market or bear market low in the precious metals at the end of 2015, beginning of 2016, and also in the general commodities, as per the CRB, metals, gold and silver, are still doing really well. So I would say the other commodities are catching up in the longer term. So that's how I see it. And I recommend as well a video that Rafi Faber did. He's got a YouTube channel now, Rafi Faber. I'll put it up in the cards below in the description. And he talks about the triple bottom that it looks like we're getting in gold, and how triple bottoms are rare, but they can also be very positive. And I've been looking at the technical picture for the last few weeks. I did a video, I think it was on the 14th of August, where I spoke about the bullish hammer in gold pointing to a new, let's see here, the full name, to a new all-time high before year ends, new all-time high in gold before year ends. And to be honest, I don't like making these kinds of forecasts, but I think things are looking really bullish technically. Yes, and the day-to-day and even hour-to-hour moves in gold and silver can be very frustrating, but we have to keep an eye on the bigger picture. And the bigger picture, long-term picture, still looks very, very good. The fundamental picture is greater than ever, especially after those very weak non-farm payroll numbers. They came out like 400 or even 500,000 less than expected. Yes, the previous month was revised up by 100,000 almost. So net, it was 400,000 worth. But the interesting thing about the numbers yesterday is that the bond market didn't react very well. The 10-year yield actually went up and bond prices went down, which is not really normal. So we need to keep that in mind there. Maybe investors are finally deciding that the Fed's losing control and that things are looking stagflationary. So if you haven't watched my video from the 14th of August about the bullish hammer in gold, I recommend you do. I'm going to put it up in the cards and in the description. And more recently, I did a video on the 25th of August about silver, and I said silver still holds the key to the precious metals bull market. And again, I recommend you watch that. I'll go briefly over that right now. Basically, I talk about how historically you need to see silver outperform gold. So therefore, we need to see the gold-silver ratio dropping when both metals go higher, and that we really need to see that happen for a strong bull market in gold and silver. And I went over the gold-silver ratio. So that's what I'm going to do today, update you on the gold-silver ratio. Then we'll look at the gold price separately, the silver price, and then we're going to look at the miners, the GDX and the GDXJ. So here's the chart of the gold-silver ratio. It's going back to November last year, so it's a short-term chart, but you can see that since the beginning of this year, around February, March, gold bottomed in terms of silver, and gold's been going up from around 64, 65, all the way up to 78 as recently as the 20th of August. And I think yesterday was a key day. It's always difficult, of course, to call a top, but it's looking more and more likely that we've seen a top in this ratio, which is positive, very positive, not just for silver, but for gold as well. So I think now, in the medium to longer term, the key level for us to test is going to be around the lows from the beginning of the year, which is roughly around 64. And on a longer term basis, I spoke in the video from about a week ago how the level of 80 in the gold-silver ratio was really important. And as you can see here by this longer term chart, it's always been roughly a very big resistance. And it's interesting that we got back up to 78 and it looks like it's failed. So here's the gold chart. It's only going back towards 2017. It's not a very long-term chart. It is a weekly chart though. You can see 3 weeks ago when I spoke about the hammer, that's what I meant there. And it's interesting that we've held this trend line that we've had since, well, actually 2019 in gold. Yes, there was that severe takedown of gold. I think it was on a Monday, is it August 16th, if I remember correctly, or maybe the week before, where gold dropped like $100 overnight. It was 1 o'clock in London and late on a Sunday in New York. And yes, that's when I spoke about the hammer, which is a bullish formation. And it looks like it has bottom there. It looks like it's held. And it's not only held the triple bottom, which Rafi talked about, as you can see here, but it's also holding that trend line. And yesterday we got up to that 1833-34 area, which has been a high recently, like this summer in July and beginning of August. We had that high. That was the high yesterday. The market didn't succeed in breaking through that level, even though gold was up over 20 bucks, over just 1%. I would expect to see that level definitely tested this coming week. And I think once we break through there, it's going to be very hard for the shorts to keep gold down. So this is more of a short-term picture. I'm not going to go through the longer-term picture, even though that looks very good as well. We have, of course, like a teacup formation forming from the high in 2011 and the high last year, and that looks very positive still. With that, let's look at silver. And yes, silver has been frustrating, especially with the public getting more and more involved in silver. Wall Street silver movement, I think that's still out there. It seems like the sentiment has gone down a little bit, but I wanted to show you a Fibonacci retracement chart of silver, and that's taking the low last year in March when silver dropped below $12, as you can see, and then it went almost straight up to 30. And then we came back to 30 earlier this year, of course, in the beginning of February. But if you look at the consolidation we've had. It's really sideways. So silver's held really well, and it hasn't even been able to retrace 50% of the move that we had from the low in March last year to the high in the beginning of August last year. The most we've been able to really retrace here is like the 38.2% retracement, which is a key Fibonacci level. So I'm encouraged. I think the fact that silver is starting to outperform gold is very positive as well. So now let's look at the miners. We'll look at the GDX first, which are the bigger mining companies, and then look at the GDXJ, which are more of the junior and exploration companies. So here's the GDX, and it looks like with the bullion market, like with gold, it's made a triple bottom. So that looks very encouraging as well. And as you can see, this week it gapped up, and I think it looks pretty positive as well. And the fact that it held around that 30 level is quite positive. So that's the GDX. Now we'll look at the GDXJ. Yes, the GDXJ usually is more volatile than the GDX. It's a little bit like silver and gold. And we broke through the low of March, as you can see here. So we didn't make a triple bottom, but it looks like a bear trap to me. The drop towards the end of August or a couple of weeks ago. And it's interesting that this week we've gotten back above the low that we had seen at the end of March this year, which was a key level here that we've broken this summer, and now we're back above that. So that's very positive as well. I think the junior miners are going to outperform the GDX. The GDXJ is going to outperform the GDX, just like silver is going to outperform gold. So it looks like everything is pointing to positivity in bullion, be it gold and silver, and also in the miners. So with that, I'm going to call it a day. Tomorrow, of course, I'm going to be doing my 9 p.m. London time live stream, and I'll talk to you then. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Rumble, Twitter, Facebook, and all these other platforms below here. I wish you all a great rest of the weekend. And if you're in the US, I wish you all a great Labor Day weekend. Take care. Bye.